Are you tired of overpaying for your gold, silver, and platinum bullion coins and bars? Then visit sdbullion.com today. SD Bullion was recently named the 177th fastest growing company in the United States by Inc. magazine. This is because they offer the absolute lowest prices in the industry and follow up with over-the-top customer service. So what are you waiting for? Go to sdbullion.com today and join more than 60,000 happy investors that save money on every precious metals purchase they make.
Hello and welcome to this week's Metals and Markets podcast. I'm your host, James Anderson of SD Bullion. Gold and silver had slightly positive weeks overall. Gold's likely to close just over $1,200 an ounce, while silver threatened with $15 an ounce on Tuesday. It appears to be closing this week slightly up over about $14.60, $14.70, somewhere in there. To begin today's podcast, I have an apology to make to Dave Kranzler of Investment Research Dynamics and to you, the listener. Earlier in the day, I interviewed Dave for today's podcast, and we of course discussed the precious metals markets. As well, we also spent a large part of the discussion on the growing bearish case for the Tesla Motor Car Company and its publicly traded stock. After our conversation, I stepped away for lunch. Then I came back to the audio files for editing, and poof, it had failed to record our conversation. Technical issues have and do happen, and it's my sincere apology to you listeners and Dave. If you've been watching or listening to this podcast for any length of time, you likely know of Dave Kranzler and the fact that he offers a short seller's journal newsletter on his website, investmentresearchdynamics.com. We will hopefully have him on again soon to discuss the aforementioned topics and more. So in place of Dave, I'm going to try and do my best to curate for you some of the most interesting precious metal related items I saw and read this past week. As well, we'll end with some Tesla bear case highlights I found in my research for today's conversation I had with Dave. We're going to begin with a former $5 billion commodity fund manager, Lee Growring, and his partner Adam Rosenwag. I recently stumbled upon these guys' 2018 second quarter commentary. Now, at the time of writing the report, they were gold market neutral. But longer term, they were making a grounded bull case for gold and precious metals upcoming. I will leave a link in the show notes for you to find their free report. The precious metal portion of their research spans from pages 16 through 23. I believe many of you will find it very insightful. These guys have also been on record calling for $100 a barrel oil, back when it was around $40 a barrel. Today, Western Texas Intermediate oil is selling at about $75 a barrel. These gentlemen are also forecasting for copper prices to possibly triple in the next commodity bull cycle, up to possibly $10 a pound. Copper is currently priced at less than $3 a pound. I'll let you read their free report. Find the link in the show notes below to hear what they have to say about the future for gold and precious metal prices, regardless of whether we run into deflation or inflation next decade. Probably one of the best precious metal reads I've had all year. Moving along, this past summer we interviewed Ron Storfeli, one of the gold industry's best chart publishers. He recently released 60 updated precious metal related charts I believe many of you will find worth checking out. I'll put a link in the show notes below as well. You can find them there. See if you agree on what I believe are the 6 most insightful charts contained. And now finally, turning our attention to Tesla. If you've been following Elon Musk and the domestic car company Tesla over the years, you likely know that from about 2010 to 2017, the company and its CEO Elon Musk have basically been financial media darlings who could do no wrong. Tesla may have just become this stock bubble's poster child for overvaluation and hype. The company went public in 2010. It traded between $20 to $30 a share for almost 3 years. Then it took off in the spring of 2013. It appears to have peaked in July of 2017 at around $380 a share, and today it alone dropped 7%, and trading just over $260 a share. In the last few months alone, Elon Musk has been sued by the SEC, the Securities and Exchange Commission, for allegedly pumping his stock price on Twitter, for which he settled the lawsuit with a $20 million fine. The agreement apparently called for his Twitter account to be screened by his fellow Tesla teammates. But then yesterday, Elon Musk again poked Tesla bears and the SEC by sending a tweet out that said the following: Just want to say that the short seller enrichment commission is doing incredible work, and that the name change is so on point. So the same guy who's going to help us colonize Mars and build trains that shuttle us across the United States at the speed of sound continues to prove that he is indeed a fallible human being. This is a story I've personally only been following on the periphery. Unlike guys like Dave Kranzler or other noted financial analysts and Tesla commentators, I'll fall short in trying to cover the full story here. I'm going to lean a little bit on some of the work of Dimitri Kofinas, formerly of RT's Capital Account, who now runs a podcast called Hidden Forces. In the following clip, he interviews long-term gold bull Grant Williams of Real Vision TV about his views on the Tesla story.
The Tesla story, I had to say, for me, it's the most fascinating thing I've seen in 35 odd years in the securities markets. It really is. It's such a poster child for the situation we find ourselves in. This company, if money wasn't free, this company would not exist. If we didn't all have these lofty ideals about making the world a better place and selling a dream of colonizing Mars and going from San Francisco to Los Angeles in 5 minutes underground.
Absolutely.
These are dreams, and it's great to have dreams. It's great to have dreams, but when you are spending other people's money on those dreams, there's a line. But let's put the moral side of it aside and just look at the company. It's remarkable to me, and I'm fascinated by it. It's the first thing I look at in the morning when I wake up, the Tesla Twitter, because it's
Tesla or Elon's.
No, well, it all comes in there. Trust me. But what's interesting is you've got bulls and bears, and they're, so far apart. It's actually getting pretty nasty now, which is a shame, because at the end of the day,
it is nasty.
It doesn't need to get nasty.
It is
right?
a shame. I agree with you.
It is a shame.
That also is something, and not just start to interrupt this to make the point, but this is a phenomenon across the country, and I think it's awful. And it doesn't serve us well.
But if you want to see it in all its glory, Tesla is where you go, and it is a shame. But what I've noticed as I've looked is that the bears in the Tesla community are not all, but almost all hardcore finance guys.
Value investors.
Right? They're value investors. They've been through cycles. They've watched Enron. They've watched these big WorldCom, and they've watched Theranos, and they understand how these things happen. And on the bull side, you've got a lot of people who are either individual investors, or they're fans of Elon, or they've bought into the dream. And so I don't want to say the quality of the argument is skewed heavily in favor of the bears, but the rigidity of the argument. And we did a piece on the Real Vision podcast about a year ago about Tesla, and I got Mark Spiegel, who you mentioned before, to come on. And Mark's a great guy. He's a money manager. He's funny as hell. He does a lot of work. He really understands the company, and he's just great entertainment. And we had Mark on, and we talked about Tesla, and he took the thing apart. And I said, look, at the end of the episode, we don't pick sides. So we've done the anti-Tesla case, and I'm now throwing the mic up. We had 60,000 odd people listen to this podcast. Email me, and if you want to come on and put the other side, the mic's yours. This is totally fair. And I put that request out 5-6 weeks in a row, and I had a bunch of emails come through, and I spoke to people, and I talked to them over the phone. I emailed them, and everybody I found, once you drill down through the argument, you eventually get to, well, Elon's going to figure that out. You've got to trust Elon.
Jeff Bezos did it.
Right. Yeah,
that's another one.
But it was more of a we're back in Elon, not Tesla. And I said to these guys, and I spent a long time talking to them. I said, look, I can't put you on because, one, you'll get shredded by finance guys that will pick your arguments apart, and two, I don't want to make it look like I'm stacking the deck by putting a weak bull case. I really, really do want someone to make me think, yeah, this thing's going up. But I just couldn't find that guy.
What do you think's going on? Like, in all seriousness, because we see this with cryptocurrencies also. Part of it, I don't know how much of it is this, but I want to float it out to you. Some of these, Tesla's not that complicated. Cryptocurrencies are more complicated, but we've had a tech bubble in the past. Mm-hmm. We've had other technologies that were beyond the scope of what the average investor could understand. maybe people were doing it during the tech bubble, but there seems to be this willingness to just say it's simple. It's this simple. Elon will just figure it out. I'm smart. I can buy an overvalued stock and still make money as it gets even more valued because people don't understand that this is the Messiah.
Right.
Elon Musk is the Messiah, right? And you had it even with Theranos in a different way, where you had all these investors get suckered in to this girl who didn't even have a medical degree and was claiming to do things that any hematologist would tell you were impossible. So is this a more extreme case of, I think you referred to it in your newsletter as denial, yeah. Denialism. Is this more extreme than it used to be?
I think it is. I think it is, and I think a lot of that is the culture we live in has developed in such a way that celebrities are very easy to build up, and they're very easy to worship, and it's very easy to create this persona that looks great on Instagram, and you control the PR very carefully, and you can create these personalities for yourself that are very seductive to people that are looking for either a bit of light in a dark world or someone who's got big dreams like them. It's not that difficult to do, sadly, and the cryptocurrency space. And again, this is another subject that I have great friends who are brilliant on both sides. Some will say it's going to zero, some will say it's going to $1 million, and they both make very persuasive arguments. And I think
many of the smartest value investors on Wall Street are actively shorting Tesla Motors now. Names like David Einhorn, Mark Cahote, and the following Tesla short, Jim Chanos, who recently spoke on Bloomberg and earlier this year on CNBC.
You had said in June that you would give up the short once Tesla begins making money, and the predictions on that aren't until what? Later this year at the earliest, but analysts thinking second half of 2019.
Not even later this decade.
Okay. So you don't see a turnaround in the works here?
Well, 3 years ago, Scarlett, this company was supposed to be making money now. And now it's supposed to be making money by 2020. And I'm guessing, by 2019, we'll hear about 2025. This company is structurally unprofitable. Its capital structure is way too leveraged. It took on, let's not forget, it took on Solar City for $8 billion in assumed debt and stock issuance. Solar City had negative EBITDA, earnings before interest, taxes, depreciation. So the drain to the shareholders on Solar City alone is about $1 billion a year. That's a big drain.
That's a lot to absorb.
So obviously investors haven't punished the company for the extraordinary losses because they're so into the Musk vision and they're so into the products and they think it's going to change the world, it'll be the next iPhone or whatever. Is there anything that could change your mind pre-profitability if it started to look like the Model 3 was really ramping up and they were selling and that it looked like they could scale that?
Well, they need to ramp it up. I mean, nobody is buying Tesla stock based on the current business, right? It's all based on the future and the hoped for acceptance of 500,000 to 1 million Model 3s a year, and then plus whatever is coming on before that. But let me make an important point. I mean, one of the reasons this company was successful and that Musk had a really vision ahead of everybody else was that he made electric vehicles sexy, right? The Model S was a sexy car.
You drove the Model S,
yeah,
right?
I've driven one. They're great. It was aspirational. It was not a compromise, right? And whereas most EVs have been a compromise, they're small little bug-like cars, and you feel good about driving one, but they're not really aspirational. They're not cool. And he made it cool. And the problem he now has is, as we've seen in the last 2 weeks with the Mission E rolled out by Porsche which will come out in 2019, is the competition is coming out with sexy sports cars and high-end vehicles. They're putting their existing line, they're electrifying them, or in the case of Porsche, they're actually designing from the ground up an electric vehicle that's a sports car. And this is going to be the reality by 2019. And that's a different animal. You now have lots of competition. You have well-financed, profitable companies competing against you. And one more point. Tesla's now behind in autonomous driving. And that's what a lot of people, again, have put these sort of stories like autonomy and mobility onto the stock. they're level 2, same as GM. And GM, many observers believe GM's Cadillac autonomous features are better than Tesla's. Audi's now at 3. And so they're not even the leader in these areas where they were a leader as little as 2 years ago.
To me, where the stock is now is not the story, i.e. where it's been, it's the opportunity. Is it a buy here or is it a sell here? I don't really care that it came from 30 or 200 or 300.
But it's still a sell here as far as you're concerned.
Oh, we're still short, yeah.
And do you have a price target in mind?
Well, we think the equity's worthless, so how's 0?
0, that's a pretty aggressive one.
No, we think the equity's not worth anything.
But aren't they like shale, where they can keep going as long as people give them capital, including deposits for future vehicles?
Right, and that's going to be the problem, I think. That in fact, a company that's wholly dependent on the capital markets has to assume that the capital markets will always stay open to them. And that's a very dicey proposition in my lifetime. The capital markets close from time to time.
As U.S. interest rates continue to increase, we can expect other hot tech story stocks like Tesla Motors will be finding rougher times ahead, while various commodities and precious metals again get their time to shine. That's it for this week. I'll be back next week with a new guest for a deep drill down on the potential of U.S. dollar values in the coming months and years, and most importantly, what that may mean for precious metal values to come. Thanks for listening.